And very excited to speak to one of the new leaders in the space. Shares the name Austin Kimm of Choice.com. How you doing, man?
Very good, thank you. First Austin I've ever actually met face-to-face, by the way.
That's exciting.
Yeah.
The new normal.
Yeah.
For the maybe the new people entering crypto, what is Choice?
So Choice is a all-singing, all-dancing banking app that enables you to on-ramp, off-ramp. We have global MasterCards, Visa cards, exchange, and also now, very excitingly, a complete earn function inside. So when you're inside, you can use your stablecoin, which is what we're about to talk about, and then very nice returns on your investments.
Excellent, excellent. So you have a stablecoin, you can earn passive income. I'm curious to hear about that, generating passive income through interest with your stablecoin. Can you tell us about that? Is that a good, investment or, a place for somebody to put their money? And if so, where does the yield come from?
Okay, that's a very interesting question because most people don't actually understand where money is generated. So if you think about the current banking system, the Fed and the UK, we have very low interest rates. So banks don't need to pay a high interest rate to borrow money from customers. So in the normal banking system, there's a very low interest market and depositors have no returns. In the crypto industry, however, there's a huge demand for stablecoins right now. If you think about an exchange, for example, exchange need liquidity. People cash out of Bitcoin into a stablecoin or through a stablecoin to another token. If you think about the DeFi sector where everyone collateralizes their loans and their various tokens, they all need stablecoins. And because supply isn't as great as demand in the crypto sector, there's not enough stablecoins to meet the demand. Those exchanges, those DeFi protocols, they will pay to borrow money. It's exactly the same as the banking system, except in the banking system today, there's more supply than demand, whereas in crypto, the supply is less than the demand.
Speaking about the future of money in general, do you see stablecoins totally overtaking traditional money?
I don't think we should think of stablecoins in the current format as the future of stablecoin. For those people who don't know, stablecoins were created about 6 or 7 years ago, and in their current guise are sort of 2 or 3 years old only. And it takes regulators time to catch up. They were spooked when Libra came around. They realized there's a marketplace out there of 2 billion people could potentially start using a currency that wasn't the dollar to start with. So regulators got spooked by that. Then they got spooked by the recent Luna problems, as I'm sure everybody knows about. So regulation is going to make a major play on this. But there's no denying that there are significant benefits to stablecoin compared to the current sort of banking systems. So stablecoin is faster, it's cheaper, it's just significantly better than the current banking environment. But regulators will start to change the way we think of stablecoins. And we shouldn't also expect that the banks will just back out of this equation. Because if you imagine a stablecoin grows, then the amount of money in the existing banking system reduces. It's a trade-off. So banks will start to lose their access to deposit income, and they will start to respond. So you should expect that banks will start to create their own stable coins. And we know that governments are looking at stable coins. So I would say, yes, there is a potential for stable coins to replace the current financial systems, but they won't be the stable coins that we see today.
What should the regulation be? If you're speaking to the regulators, like specifics, what do you want to see?
Well, I think the core that everybody is expecting to see, and I think is reasonable to see, that if it's a stable coin, it has to be pegged to something that is stable. Otherwise, it's an oxymoron. It's not stable. And as we saw with Luna, an algorithmic stable coin is on assumptions, on promises, on all sorts of, I guess, guesswork as to what people are going to do. So the only way to guarantee that a stable coin stays stable is to back it by an asset which is stable. And right now, the only real assets that are stable are money. The US dollar still being the most stable of all currencies. So I would anticipate almost every stable coin going forward, and I do mean every stable coin, will be backed by physical assets with a significant percentage being dictated to be in dollars or euros or some other stable currency.
Do you have any thoughts on quote unquote decentralized stablecoin versus a centralized stablecoin?
Yeah, I mean, I think the interesting thing is that to have a decentralized environment, you actually need a decentralized stablecoin, because if you have a centralized stablecoin such as USDC, which is only backed by the dollar, then it is always open to some form of regulatory control. And one of the biggest problems I have in the crypto space is that everybody talks about the unbanked and the 2 billion people out there that don't get access to banking environments and can't connect in the real world. And they talk about how crypto can help that. But actually, crypto can't help that, because if you look at the way we do KYC now, the Know Your Customer, almost all of those unbanked people can't pass the KYC process on a centralized exchange. They don't have a passport. They don't have an electricity bill. They don't have the various things to get through KYC. So if you're going to have a decentralized environment, you need a decentralized token as well. And right now, there is no, I would say, real decentralized token that will meet the demands going forward. I know we have DAI and a few others, and they're effectively a combination of an algorithmic stablecoin with collateralization in various other currencies, but they're complicated. So I think we will see a decentralized stablecoin, but we haven't got the version that we expect to have yet. But it is essential in the future economy, if you're going to bring in all these unbanked people, that there is a successful decentralized stablecoin.
Austin, what do you wish more people understood about Choice?
Well, I think Choice is all about earnings. As you already asked me, how do you earn money? If you put your money in the bank today, you get 1%, maybe 2% if you're lucky. If you put your money inside choice.com, we don't try to create money for you. We just give you access to where money can be made. And the problem with all, I would say, decentralized earning models, it's incredibly complicated. If you've ever tried yourself to try and use one of those earning models, it's very, very difficult. So I think what you need is more marketplaces. I mean, if you look at the biggest leaders in the world today, they are effectively marketplaces where they didn't try to create the product themselves, they did that. And that's what Choice does. We give a marketplace, we show people what the risk is, how long you have to stake it, and it's a solid income opportunity for what most people are just holding in a wallet and earning nothing on it.
And is your primary demographic more institutional players or average retail players?
It has to be both. I mean, if you look at any major financial institution, they can't just be retail or institutional. Actually, you can be just institutional, but you can't be just retail. So for us, the institutions give a confidence level to the retail play. So if you've got, I don't know, $100 million of institutional money, that first $1 million of retail money is much easier. So we are both plays. The institutional requirements are very different than the retail requirements. They need different platforms, they need different services, but at the end of the day, they both want to make returns on their investment.
One of my final questions is, could you go over again the products and services Choice offers now, and then what we can expect going forward in the next few years?
So I think all the major institutions that are in the crypto banking space will follow a similar path, I'll be honest. So we all started off doing payments. Everybody started off, with a few exceptions, everyone started off doing payments. And yet we've realized in a crypto winter, payments are not the number one objective of most people owning crypto. Most people own crypto because they want to make money. And most people want to make money but don't know how to do that. They're not traders. They may follow an Elon Musk tweet and lose some money, etc. But most people just want to buy crypto and hope the price goes up. And I think that is an unrealistic strategy, because we know it's a volatile market. So I think what you will see from choice.com and from other companies, but I think we are the leaders in this right now, is the full access. It will be like a bank, but for crypto. And the only fundamental difference is that you'll be earning significantly more through the likes of choice.com than you would be if you were in a traditional bank. Why have $1 when you convert it to a stable coin and 10% with practically the same risk as the dollar? I mean, why would you not convert?
My final question, and we kind of already addressed this a few times, but just very concisely, by 2030, give me a prediction for the stablecoin ecosystem.
So I think in 2030, you're going to have pretty much all the major economies will have their own central bank stablecoin. There's more than 100 countries right now looking at doing this. It bypasses the problems of SWIFT and all the the banking regulations. There's going to be a whole range of them. I don't believe they will take over because I don't believe they're going to be interest bearing. So you're still going to get private stablecoins. Every private stablecoin will be backed by a physical asset. There will be no algo stablecoins of any nature that do not get backed by a physical asset. And I think the primary stablecoin will actually be a bank-denominated stablecoin because they already have deposits. They already have insurance. So if you had a choice, for example, between Tether, which has it's backed, but it's not backed 100% by a physical currency, and it has no insurance and no regulation, or you'd prefer to HSBC, which is backed by deposits. It's got a $250,000 insurance policy if something goes wrong. Which are you going to choose? Now, maybe HSBC only pays 6% and Tether pays 10%, but many people will choose that. So I think you're going to see a major pushback from countries, from banks, from the existing financial institutions, and the Tethers and the USDCs of this world will have to up their game, and effectively they're going to become banks. It's going to be almost a reverse of where we are now, and we're going to be back to a banking environment where the banks and the major institutions actually control stablecoin.
I encourage the folks out in the audience, check out the Choice booth right over there. And Austin Kimm, thank you very much.
Thank you very much. Thank you very much, everyone.
Amazing.